Welcome. Today we're diving into the world of allowable expenses under Malaysia's Income Tax Act 1967. If you're a business owner or tax professional, knowing what you can and cannot deduct is crucial for accurate tax reporting and maximizing your savings. We'll break down the key sections 33.1, 34.2, and 34.6 and explain how each applies to different types of business expenses. Let's start by understanding what allowable expenses are and why they matter for your business's bottom line. Allowable expenses are deductions that help you reduce your taxable income. The main purpose is to ensure only expenses directly related to generating business income are deductible. This means personal, private, or capital expenses are excluded. By following these rules, businesses can claim legitimate costs and avoid penalties. Understanding this distinction is the foundation for proper tax planning and compliance. Section 33.1 is the backbone of allowable expense deductions. It states that all outgoings and expenses wholly and exclusively incurred in the production of gross income are deductible. This means the expense must be entirely for business purposes with no personal benefit and must have a direct link to income generation. Let's explore what this really means in practice. For an expense to qualify under Section 33.1, it must pass three important tests: wholly, exclusively, and incurred in the production of gross income. Wholly means the expense is entirely for business, exclusively means it's not mixed with personal use, and incurred in the production of gross income means it directly supports earning revenue. These tests help ensure only genuine business costs are deducted. Let's look at some common examples of allowable expenses under Section 33.1. Operating expenses like salaries, wages, office rent, and utilities are deductible. Selling expenses such as advertising, marketing, and delivery costs also qualify. Finance expenses including interest on business loans and bank charges are allowed. Administrative costs like audit and accounting fees as well as repairs and maintenance can be deducted too. Even bad debts written off, if previously recognized as income, are allowable. Employers' contributions to EPF within statutory limits are deductible under Section 33.1. Additionally, travel and transportation expenses related to business activities can be claimed. However, it's important to ensure these expenses are strictly for business purposes and not for personal benefit. Keeping clear records will help support your claims during tax audits. Not all expenses are deductible. Section 39 outlines non-allowable expenses such as private or domestic costs, capital expenditures, depreciation, income tax payments, fines, and non-approved donations. Non-business entertainment and personal benefits are also excluded. Understanding what you cannot claim is just as important as knowing what you can. Section 34.2 introduces specific or statutory deductions. These are expenses that may not meet the strict wholly and exclusively test but are allowed to encourage certain business activities. Examples include employer contributions to approved provident funds, research and development R&D costs, employee training, export promotion, professional literature, recruitment, approved donations, practical training, and environmental protection expenses. Aim of Section 34.2 is to promote business development, employee welfare, and national interests. Expenses like R&D, staff training, and export promotion are encouraged through these deductions. Even if they aren't directly tied to income generation, they're recognized for their broader economic benefits. This approach helps businesses invest in growth and innovation. Practical examples of Section 34.2 deductions include employers' EPF, SOCSO, and HRDF contributions up to statutory rates, expenses for in-house or approved R&D, costs for employee training under HRD Corp, and expenses for promoting Malaysian products overseas. Expenditure on professional journals, recruitment, approved donations, practical training for students, and environmental protection are also covered. Section 34.6 allows for special or additional deductions, often in the form of double deductions. These are prescribed by the Minister of Finance and are designed to encourage investment in priority sectors or socially beneficial activities. The deductions are not automatic and usually require approval from relevant authorities, such as MIDA or HRD Corp. Main goal of Section 34.6 is to incentivize businesses to invest in areas that benefit the economy or society. By offering double deductions for approved R&D, export market development, employee training, environmental protection, scholarships, and technology upgrades, the government encourages companies to contribute to national growth and innovation. Examples of allowable expenses under Section 34.6 include double deductions for approved R&D, export market development, employee training, and environmental protection. Scholarships to Malaysian students and contributions to community projects may qualify for single or double deductions. SMEs upgrading their ICT or e-commerce infrastructure can also benefit from these incentives. It's important to note that special deductions under Section 34.6 are not granted automatically. Taxpayers must comply with specific income tax deduction rules and obtain approval from relevant authorities. Always check for the latest Ministerial Gazette orders to ensure your expenses qualify for these incentives. Summarize the three key sections. Section 33.1 covers general deductions for expenses wholly and exclusively incurred in producing gross income like salaries and rent. Section 34.2 allows specific statutory deductions for encouraged business expenses such as EPF, R&D, and staff training. Section 34.6 provides special or double deductions for approved activities like export promotion and green technology. To make things clearer, let's look at an example. XYZ Manufacturing SDN, BHD. Incurred several expenses in 2024. Salaries and wages, RM200000 are allowable under Section 33.1. EPF contributions, RM26000 are allowed under Section 34.2. Overseas trade fair expenses RM 50000 approved by MIDA qualify for double deduction under Section 34(6). However, a donation to a non-approved body RM 5000 and purchase of machinery RM 100000 are not deductible. Claiming deductions, remember these key principles. The expense must be incurred within the basis year, must be revenue in nature, not capital, and must be wholly and exclusively for producing income under Section 33(1). Certain employee welfare and developmental expenses are allowed under Section 34(2), and double deductions are available under Section 34(6) with proper approval. Crucial distinction in tax deduction is between revenue and capital expenses. Revenue expenses are day-to-day costs incurred in running the business and are deductible. Capital expenses, such as purchasing machinery or equipment, are not deductible but may qualify for capital allowances instead. Always classify your expenses correctly to avoid issues during tax assessments. Proper documentation is essential for supporting your deduction claims. Keep invoices, receipts, approval letters, and any relevant correspondence. This not only helps during tax audits but also ensures you're prepared if authorities request additional information. Good record keeping is a best practice for all businesses. Tax laws and allowable deductions can change from year to year. Always stay updated by checking the latest Ministerial Gazette orders and official guidelines. This ensures you don't miss out on new incentives or claim deductions that are no longer allowed. Consulting with a tax professional can also help you navigate complex rules. Summary: understanding allowable expenses under Sections 33(1), 34(2), and 34(6) of the Income Tax Act 1967 is key to effective tax planning. By knowing which expenses are deductible, following the right procedures, and keeping proper documentation, you can optimize your tax position and avoid costly mistakes. Stay informed, stay compliant, and make the most of the incentives available to your business.